Banking conditions in the Ninth Federal Reserve District were good in 2014, and I'm forecasting that they're going to be good in 2015. Hi, my name is Ron Feldman. I'm the Executive Vice President for Supervision, Regulation, and Credit here at the Federal Reserve Bank of Minneapolis. And today I'm going to be talking about conditions for banks in our district in 2014, and I'm going to make a forecast for conditions in 2015. So before I get started, let me just remind you what the Ninth District is. It includes the states of Minnesota, North and South Dakota, Montana, the Upper Peninsula of Michigan, and the western portion of Wisconsin. And as you can see, we've got a lot more data than I'm going to cover today on our website. So I'm going to do three things. I'm first going to describe how conditions were last year relative to the forecast I made last year. It gives you a sense of how accurate our forecasts have been. Then I'm going to characterize the overall state of banks as of 2014. And then I'm going to make a prediction of how banks are going to be doing as of 2015, so 1 year from now. And I'm going to show you some representative graphs and charts that give more evidence for the points I'm going to make. So first, let's start with how conditions were relative to the forecast I made. And generally speaking, the forecast I made last year was accurate. That is, the actual values came in within the range that I was forecasting, although generally it was towards the ends of those forecasts. So we're going to be forecasting three things: the profitability of banks, their loan growth, and then their level of problem assets. So for profitability, I was generally in the middle or lower part of the range that I forecasted. So banks were generally sort of spot on to what I was thinking, or they had a little less profitability than I was thinking. Loan growth was actually at the higher end of what I was forecasting, although in some cases it was actually higher than what I was forecasting. And problem loans generally were the lower end of what I was forecasting. So not a bad forecast, but it was at the range of those forecasts. I think probably more importantly for most viewers is just a sense of, well, not whether you hit your forecast, but what is the characterization of those conditions. And I would say, generally speaking, it was a good year for banks in our district, with, in some cases, profitability being a little weaker than what observers would be hoping for. So let's go through each of the three categories. Profitability ranged across the district's states. In some states, profitability was pretty strong. In other states, it was flat and relatively weak. So I think overall it was sort of a medium performance. In contrast, loan growth was generally quite strong, and as you're going to hear in the forecast, that helps in thinking about what we're going to see next year. Problem loans are already in really, really good shape to begin with, and here they got in even better shape in 2014. So to summarize, I would again characterize it as a good year because asset quality, or the amount of problem loans that banks have, are at very, very low levels, the lowest levels that we've seen in almost 30 years. Loan growth is above what we've seen historically, and profitability, while not uniformly positive, was at least positive in some states. So what are we thinking about for next year? Or what am I thinking about for next year? I think we're going to have another good year, and I think it's going to depend. We're going to see the biggest gains basically where we're currently weak, and the lowest gains where we're currently strong. So one way to think about it is that we're moving to something that looks like normal, looks like historical norms. So what does that mean? So that means generally we're going to expect to see medium gains for profits. Why? Because economic conditions in some of the states are improving, because historically we've seen that bank data tends to return to its historical norms. And since these profits are a little bit lower than historical norms, my expectation is that they're going to go a little bit higher. I already mentioned loan growth. Well, with loan growth comes some profits. In terms of loan growth and problem loans, there I'm expecting them to be flat, but they're already at very strong levels. So flat at a good level is a good thing. Now, that doesn't mean that there's not some factors that could make it less than a stellar year. We know that our district is very dependent on agricultural, but there's many banks that make loans to ag producers. That's a weak sector. We also know that in some parts of the district, energy is very important. That's going to be a little bit weaker. In terms of profits, we know that some banks have improved profits basically by putting less money aside for, which is consistent with their strong levels of problem loans. But nonetheless, that was a prior source of profits. That won't be a source of profits in the future. So there are some things that are sort of hedging against a good year. But overall, I'm thinking that at least through 2015, those headwinds are not going to be so strong. So now I'm going to show you and I should just take a step back. All forecasts are going to have a lot of uncertainty to them, right? So we'll see a year from now how this turns out, but that's the forecast for now. So let me show you some data that's consistent with the points that I've just made. So first I'm going to talk about profitability. And let me explain what you're looking at when you're looking at this graph of Minnesota bank profitability. The blue line that's moving up and down with the dots is showing you actual levels of profitability for the median bank in Minnesota. So that's the middle bank. The blue line that's dashed, that's going across on a horizontal, that's the median over the longer term. So from 2001 to currently, that's what the median amount is. The red bar with the sort of barbell, that was my forecast last year. So you can see that the actual value at the end of last year is at the lower end of that forecast, which is what I've said before. And then the green bars are my forecast for next year. So I'm saying that profitability is going to be coming between that range. And you can see that their green bar is a little bit higher. The barbell is a little higher than the red barbell, which is telling you that I'm expecting things to go up. And if you think about the medium of the green barbell as being my best guess of where things are going to end up, you can see it's actually right at or above the historical norm. So this captures really all the points I've been trying to make. Profitability came at the lower range. There was some movement in profitability in Minnesota, but not a ton, and I'm expecting a better improvement next year. So let's look at another example of profitability. That's going to be Montana. Here you can see that there actually was pretty good gains in profitability. Still below the historical norm, but you can see a big gain, and I'm expecting another good year for Montana profitability next year. Again, as it returns closer to its historic norm. Now let's look at an example of loan growth. Here I noted that loan growth was generally very strong across the district and that I'm expecting a little less of improvement. You can see here for western Wisconsin that actually loan growth was better than what I was forecasting, and that I'm forecasting really that it's going to stay roughly the same. So how do you see that? Well, if you look at the last actual observation, the last blue dot, you can see it's right at the middle of the green barbell. How about problem loans? Here's an example from the Upper Peninsula. I noted that these are below the historic norm, so you can see that. In this case, quite below the historic norm. You can see that its actual was better than what I forecasted. And you can see I'm forecasting, again, it to stay relatively the same, as the middle of the green barbell is very similar to the last observation. Now let me try to summarize with a few graphs that are going to look across all of the states simultaneously. Here we're looking at problem loans, and you could see that on the right bar graph, other than South Dakota, they're all negative. That means there was improvements in all the levels of problem loans. On the left part of the slide, you can see the actual levels in each of the states. And you can see that, for example, the Dakotas are very, very low. Those are very, very low levels of problem loans. And for all of those states, those are all historically low levels. What about profits? Here you're seeing a little bit of what I was talking about before. On the left side, when you're looking at the absolute level of profits, you can see that the Dakotas, again, are the highest. And you can see on the right that the changes varied across states. Some states saw big improvements. We mentioned Montana. Some states didn't see any improvement at all. And finally, loan growth, you could see, was generally quite strong. The levels are very high, as shown by the left graph. And on the right graph, you can look at the changes. Those are relatively high levels of changes. So let me summarize by noting that I thought 2014 was generally a good year. For some states, profits were a little bit weaker. And I'm forecasting basically a return to normal levels after the financial crisis. Good growth in profits, getting back to normal, problem loans and loan growth staying at strong levels. Thank you.